What time do we need to finish up?
Yeah, we get 5 minutes this time.
Give me a 5 minute. All right, yeah. Get him out of here.
220.
Thanks,
220.
I appreciate you. All right. Well, welcome to whatever the fuck this is. Attempt number 2 at Money 2020 podcast with Lindsay and Zach. We got Ohad in the booth. How you doing, Ohad?
Are you actively recording?
Yeah, we've been recording the whole time, actually.
Okay,
yeah, all of that. The first video podcast, all that shit is
good to know.
Yeah, we'll see if the listeners get to experience the BS that was that. But
yeah, the subject line of this is just phenomenal.
It just said, "Are you looking for someone?"
Correct. I'm not going to open that.
No, I don't want to know.
It's like the creepiest subject line wins in Money 2020, I think. Have you guys noticed that? I get some weird emails.
Yeah, there was a moment in time when this guy from Salesforce who wrote the book, Aaron something, he wrote the book about scaling SDRs.
Oh, yeah.
And there were a few templates for emails that were being circulated, and every goddamn entry-level SDR used the same one. Are you the right person? It's like sometimes I still see it, and like a decade later, guys, come on, it's time to update them. But yeah, that one's not.
That was perfectly timed.
Yeah.
So
it's a little.
No,
that's a little weird.
I have 2 someones.
Yeah.
So should we take a step back and say what we are here to talk about today?
I mean, we don't know what we're going to talk about yet, but sure, we should at least explain who we are. So, Lindsay, I think folks know you, but if you want to do a quick, this is who I am, this is what I do.
Yeah, Lindsay Davis, head of markets. Freddie Mercury impersonator sometimes. We build payroll connectivity to help consumers access their financial data and payroll accounts and make changes to their direct deposit.
You just jump over the inside joke of the Queen reference, and we're just going to act like listeners are going to get that shit, but we persevere.
I didn't get that shit.
Yeah, nobody did. Even the people on the inside didn't get that one. Oh, who are you? What do you do? What is this TrueAccord thing that you seem to be working on for some period of time?
Have been. So I'm co-founder and CEO of TrueAccord, and TrueAccord develops solutions to help consumers in debt repay their debt. So whether it's like early stage when they're just late stage when they could be harassed by debt collectors, or they could be working with us. And more we're going to launch a bunch of other stuff, but there's like what happens when you're actually starting to dig yourself out of the hole and really want to take responsibility of all of your life, get protection from abusive debt collectors, fight back a little bit, negotiate, and so on. So we're thinking about that. We're building tools for that. Last month, we launched our Retain product. It's basically white label, our expertise, your brand, early stage, and that's a little bit more relevant than our relevant to a lot more fintech companies, right? Because even if you're very early on and you don't have a lot of losses, you want to be able to get consumers back on track, and this is what this product is doing. So even if you're not ever planning to work with collection agencies, which a mistake, but whatever, then you can use that product in order to help your consumers get back on track. So Retain, it's actually pretty cool. We launched it with a bunch of fintechs that we can't talk about yet, fintech companies. Sorry, David.
Yeah, no, you should apologize to me too. I threw up in my mouth.
I'm
a little
apologizing to myself.
That. Yeah, we should probably end it there.
Yeah.
We had fun, but then you said fintech. So.
I am very disappointed.
Damn it, Ohad.
Okay.
You're doing so good. So tell us more about like the what is the technical lift if you're a fintech company that's involved in lending, be it, I guess, credit, term loans, could be anything lending centric, right? Like any of those ills. But how does it actually get implemented into the product? Is it just like very straightforward SDK kind of thing, or how does that work?
It's an API right now. We're actually building the SDK and like the deep linking. It's going to become more and more embedded as we add more functionality into it. But right now, it's basically handing the consumer off with the handshake into a branded experience, but like a slightly different experience. It helps them get back on track. This is a product that encapsulates the internal servicing team. So we don't do the servicing for this product. It's your team, it's your systems, it's exactly what's happening with the consumer. We're just focused on getting you connected with the consumer. Instead of having to reach out to them, we do everything to get them on, negotiate the payments. If there's a payment, it's your account that charges them, and so on. We're at the point where it's hard to hire a lot of engineers. And as you scale, you want to focus on the stuff that you do well. So you want to work with a team that's obsessing over the problems that you don't want to solve yourself. And that's what we've been doing for the past 8 years now. 17 million consumers. We have 8 million active accounts. So we've been doing this for a while, and we know what they're doing in a way that also is positive for the consumer, right? In a way that actually gets your positive perception of your brand. And then even when you go and they work with us as your vendor, that's also, if you look online, great reviews, consumers actually saying, I can't
love
believe
your
I'm saying that.
reviews.
It's
They're
cool.
really nice. It's like a very human way of collecting and making it what is a negative experience somewhat positive, as positive and human as you can.
Yeah.
And the fact that consumers write reviews about that kind of stuff,
Yeah.
it's wild.
And they're positive and like often pretty clever, I find. Like that's the only thing I ever read that you put on LinkedIn is those.
When you think about it though, what is collections, right? People think that collections is harassing consumers into paying.
Yeah.
That's not the truth. If you Joe Smith owes money, $500 to a firm, he's in the market for a way to pay for the debt, right?
Yeah.
Most people want to pay, they just can't, right? So our perception is this is almost like a specialized e-commerce application. My job is to get you engaged, is to tell you that there is a way for you to get the product that you want, is to find the product that you actually want, is to put it in front of you in a way that you can actually hear and actually sign up. Is reduce friction, all the stuff that you do everywhere else, right? Flip the model, it works well. And then the consumers feel that they have agency. And by the way, sometimes when people complain, they complain, I love the complaints that are a little bit entitled. Like, I need to get better service. Great, yes. You don't feel like we're harassing you. You feel like you deserve something from us and we give you a service. That's exactly what we want.
That's interesting. It flips the entire thing on its head. I've never really thought about just that simplicity of the words that they're using.
Yeah.
And the expectation that somehow is developed out of left field.
Yeah. It's not demand money, but be nice. It is literally think about it differently.
It's so bizarre. I guess it's not bizarre. It's in this industry that we live in, but it is pretty wild that that's a competitive advantage.
Yeah.
And a big one.
It's just, fundamentally, it's bill pay doesn't align with payday. So if you have a debt that's owed and the person that's charging the fees and wants to get repaid, if that underwriting process isn't human, then the whole system is going to continue to be backwards. You're going to have to build it yourself from the outside in, prove that it works, and then white label it.
Yeah.
Which is where we're at.
Yeah. One of the earliest things that you did, and you see that because you guys deal with payroll, is you basically ask people, when do you get paid?
You don't have to ask them. You can just get it.
Yeah, with us, exactly. With you, we don't.
Would have been way more valuable if you asked them who paid them, but we're building that process.
Well, 7 years ago, you guys did not exist, right? So we had to ask.
Right. Absolutely.
Yeah.
At least you ask.
Yeah, and we see when we gave people, most of the people who pay us basically they subscribe to a payment plan, right? So it's like recurring billing with a lot of consumers. And we found that if we give them a way to move the upcoming payment by up to 3 days on their phone, on their own, breakage rates on the subscription drops by 13%, and inbound contacts to the call center drop by 11%. Makes sense, right? Yeah, the payment scheduled on a Friday, it's a holiday, you want to move it to Monday, It's super easy. And that's the whole idea. You don't need to strong arm people into paying. On average, every consumer pays us less on a monthly basis, but twice as many consumers actually pay.
Wow, that's interesting. It makes sense. I had one credit card go into default like beginning of COVID because I just forgot I had it.
Right.
I think it was like a $200 bill or something, but it ended up with a collector and they were just absolutely, I think I might have told you this story at some point when we talked, but they were absolutely harassing me.
Yeah.
And like living in Kansas City, payday loan center of the world, all these other things, like, that the debt collection world is disgusting, but you don't really get it until somebody calls you and tells you that you're the worst fucking thing to ever happen to planet Earth and you pay your bill, you deadbeat. Like, good God, now I really don't want to pay you. Like, my credit score wants me to pay you, but
100%. That's exactly the experience that I had when I started a company. Actually, the person who called was not abusive, but was very demanding.
Yeah.
And it was just uncomfortable. And I just thought if I didn't have the money, that would be an incredibly uncomfortable situation.
Yeah.
And that's kind of where it started from.
Yeah. So is everything you're talking about with like the ability to move the self-service stuff, the ability to move the payment, all the kind of things that we expect out of a TrueAccord experience, is all that available inside of Retain? Is there anything that isn't in that experience?
Some of these things we're building because they're for the later buckets. When you think about early stage collections, it's more about cure rates, like how many people can you get back on track. So you're only late on one payment. When we deal with Recover, that's a late stage product. It's a lot more about something has happened to you. You're getting divorced. You lost your job. Yeah, it's a healthcare situation, right? So you're in the middle of trauma, and it's more about let's talk about everything that's happening to you, and let's talk about your life in general. That's also where we're going with the rest of our products. It's like, let's think about the overall
Help.
load, exactly, health of your life and everything that you have on. Because, people talk about BNPL a lot, and it's true that consumers that use BNPL have, we are seeing 5 to 6 different loans from different providers.
Really?
Yeah, but when you look at credit cards in the US, consumers have on average 3.5 credit cards. Now it's down from 5, but it's still 3.5 on average. So it doesn't matter what product you have. If you're stacking, you're stacking. If your life is going to shit really, and you really need to survive, you will max out everything you have. Doesn't matter what the product is.
Yeah.
So that's what we're dealing with. It's like, okay, let's start picking you up, right? First of all, we can help. Then let's talk about how we approach all of this. And then let's stop the phone calls. Then let's level the field so you can see this person that I want to negotiate with, what's worked for others, and how can we actually make it happen. And it's a very, very complex situation. And a lot of providers in this market hide behind policies and procedures, right? Can't talk to you on the phone. It's not in our policies. Like, the consumer is on the verge of a panic attack from crying, not wanting to call you because they are stressed. Okay, can you answer the friggin' email? No, it's not in our policy.
It's okay.
I don't know. Okay.
Can you talk to me about some of the repayment options that you guys are thinking through? I think we talked preliminarily about it. Like, I wrote a newsletter. Like, we're working in a BNPL space right now, paying back the loan from the paycheck, and like the propensity for the consumer to want to do it. If they can get access to a better interest rate, but then doesn't help with the collection side of things because they've already fallen behind. But you could see if they were unemployed randomly, right? Like, all of a sudden they don't have a payment that's going to come in 2 weeks.
Yeah.
And then you can kind of get ahead of it. It's like kind of like slapping together some money advances in between paydays as well.
Yeah. We are very careful with credit for consumers in collections. If they're starting to dig their way out and we think that they're doing better and we have an insight that's not factored into their credit score, then maybe we can do something there. Just like very low APR, but
it's a slippery slope.
Sorry,
it feels like a really slippery slope.
100%, exactly. So we don't want to mix. And actually, thankfully, this is an area where regulation actually protects consumers.
Yeah.
Which is good if you follow them, which some people don't. But in terms of it's a lot of it is about flexibility. Pay now, pay a little bit now, pay later. Custom payment plans. Literally, I have 3 jobs. I can pay $25 this week, and I can pay $50 next week. And every once in a while, I get more tips, so I can, pay you $10 out of cycle, and you can update the payment plans. This type of flexibility, one, you can't do with a call center, and two, very helpful for the consumer.
Yeah.
And I want to tie this back to macro. We've been for a while, we didn't know what the market's going to look like. Of course, consumers were sitting home. Nobody was buying anything or not buying as much. Got money from the government. People are paying down debt. That was nice. And, default rates fell off a cliff and so on. But I think we all knew that the party's going to be over at some point, unfortunately. And I think at this point, looking at data from credit bureaus, it looks like the bottom has been, was in June of this year. So when you look at credit underwriting, when you look at default rates, when you look at evictions, when you look at all these things, everything is up and to the right, unfortunately, and it is accelerating. And it's not a coincidence that we see a lot of companies around here offering start a credit card plan program in 90 days, thinking about lending and so on. For the next 6 to 12 months, consumer lending is going to be bonkers, right?
Dangerous.
And potentially dangerous if you don't think about the ramifications. And one of the things that we're seeing is that people in the fintech space don't want to think about losses before it's too late. And it's really sad, in my opinion, when you start lending to consumers, you don't think about the losses, and then 6 months down the line, you see that you have losses and you panic and you just send it off to a regular collection agency or to sell it off to a debt buyer, because even the best debt buyers, when we work with many of them, you lose control over the experience. You lose the ability to reacquire the consumer. You lose the ability to give them the sense that you're actually taking care of them. And it's suboptimal. So, with this white label product, we're basically trying to tell everyone, we have a way to help you from day one, so that you don't need to think about it, but we actually can obsess about it for you.
So you said that we hit the peak in June. Does that mean it's like slowly improving now, or it's just like continuing to compound and get worse?
No, it is not improving. It means that the default, good point. So the default rates were lowest in June and have
Oh,
started to grow
So the
since.
valley was hit, and now we're kind of peaking sort of
Yes.
situation. Okay,
In terms
gotcha.
of credit activity, so overall credit volume, so
Yeah.
new loans are being underwritten. The default rates are growing at a relative term sense as well. So it's not only that we're borrowing more dollars, so there are more dollars in default. There are also more relative dollars in default over time.
Okay. If you had to compare and contrast it, like if you had to guess about the way that this is all going to feel once the shit hits the fan kind of thing, do you think we're looking at like a less mortgage centric 2008? Do you think we're looking at just like an extended shock from COVID? Like, or do you think this is like a thing that is in and of itself and very novel?
Yeah, I don't know. And
I expect you to know everything. That's a very, I didn't see that answer coming.
Yeah, I know everything other than that.
Just that one thing.
No, but really, I don't know. I don't know
future.
how you can predict these things. You know, I always say I live between three countries, right? Israel, Sweden, and the U.S. And at any point in time, if I visit one of these countries, someone's going to ask me about one of the two others and say what they're doing, what are they doing right or wrong, depending on the time. It's like, you see three different approaches, and in the US, of course, based on state. And at any point in time, somebody looks very smart and then immediately looks very dumb. And you look at that and you say, how can you, one, think about public policy in these times? I couldn't. I don't want to, right? And two, how can you predict anything? It's insane. So
I'm so glad I got out of the analyst game in April 2020. I dropped one last report. I was like, well, bye.
Yeah. Well, also, like pretty much every show we do together, I pull up something from 2 years ago that you said that has actually come true. Like a lot of those things have actually happened.
I believe that.
Yeah, consistently. It's pretty much every time that we do it.
It's fun. I would have never predicted a pandemic.
Well, sure. But yeah, I mean, to your point, like, yeah. But even the mask thing was like, everybody, we don't need masks. And then next week, need masks or I'm going to murder you in the street. And then, yeah, it's a very bizarre, there's a lot of overlap.
Yeah, look, it's hard to operate. We're almost 400 people, 2 offices, a lot of remote people, and you want to operate in a way that's actually safe for folks to come to work if they want to.
Yeah.
And in some cases, because their role has some regulatory implications, because they have to. Right. And you clean stuff up, and you can maybe mandate vaccinations and mandate masks, and you distance and so on. And thankfully, we've been fine on that, but it's been rough. And making those decisions, you basically week by week, you may change your mind. It's very complex, but humans are precious. We got to protect them.
Yeah, and nothing if not complex as well.
That too.
Yeah. So to your earlier point, and I'm curious about both of your perspectives on this, what do you think it is about is it the credit world? Is it the kind of people founding the companies? Is it the incentives laid upon them by VCs? Like why is the ignoring of what it actually means to lend, ignoring of, what it actually means to have losses, especially in an early stage company? Like why do you think that manifests the way that it does in what you were talking about earlier? That was the most long-winded fucking question in my life. I apologize to everyone. I can't talk.
How about you tell me what you think, and then I tell you what I think.
The third one is probably what I think is VC incentives and just a general like lipstick on a pig kind of vibe that we like to do at board meetings, where we like to tell a story that maybe is not always totally in line with reality, and not lead with what's wrong, but lead with what's absolutely perfect. And it's time to preempt our next round. That's my 2 cents, but maybe I just lost all my VC friends. So I don't know. What do you guys think?
I think there's just a lack of awareness of the end consumer. They haven't walked a mile in the shoes of the end consumer. Like
the founder or the VC?
I would say maybe potentially a little bit of both, but I doubt that if a company's raising at that later stage that they haven't been invested in that market. Like this is actually, a lot of these companies have been building for 7 years, 8 years, 10 years, and like this is an inflection point for them, such that when the pandemic happened, these companies didn't just get spun up. It's like they were in the right market sort of at the right time. So that is definitely what happened in that scenario where you're seeing like the pickup. But I'm just saying from like the lack of awareness, like we're continuing to push technology in this direction. We're like, oh, if everything's automated, like lipstick on a pig, like you said, there's humans in the loop in both of our companies, like for compliance reasons, for literally because a computer can't make a human stop crying when they can't pay their bills. or they, accidentally overdrafted their bank account that actually cost them hundreds of dollars, not just the $35 overdraft fee. But there needs to be an awareness of like how far technology has come. But yes, it's 2021 and people still sign up for bank accounts and they're handed manual forms to bring to HR to switch their direct deposit, or they're given a portal to sign in and figure out how to do it themselves. It is absurd.
Yeah.
Absolutely.
Your turn.
Yep.
I think both of you are making very good points. Not that VCs don't understand. I think there are great VCs in the fintech world that understand losses and so on. I do think that, but I agree with you that a lot of funding creates a very laissez-faire approach to sometimes losses, sometimes to management too, right? We'll hire more people and that's going to be fine. And I'm not, I don't think about specific companies, but, looking at what we've had to do because we've had to mature very quickly, that is a little bit different in that regard. And I think I agree with you, Lindsay, that it is almost binary in investors that I talk to. If they've had an experience, even Zach's experience, like something like I forgot to pay something that I could actually afford, and then I experienced how abusive it can be, the conversation is significantly different. So the walking in your shoes and understanding that people in debt are not villains. They don't do it intentionally. We don't need to, hit them on the head. And they're not victims in terms of like they're not in control of their lives and so on. And I cannot, again, every time I say this, I say, read The Unbanking of America, a book that's amazing about that shows in an incredible way how people make the most rational decisions given their starting conditions, which are starting conditions that most in the founding and funding communities do not understand, have not experienced. And I think that's a big part of that.
Yeah. But they all took economics classes. I feel like the assumption of a rational human in your economics class, I feel like gets you to a similar position if you like take it to heart. But you both just viscerally disagreed with me. So
it's very, if you don't have the lived experience.
Yeah, I guess my economics classes were tied up in the fact that I was poor when I grew up. So I definitely had that filter when I was going through that. Yeah,
I think so. Yeah, I think that's helpful in that regard. It doesn't mean that it's easy to do it, but you absolutely understand. And this is exactly, sometimes people ask me, how do you hire so many people to work on debt collection? Once you are, so when we started, of course, this was like people would refuse us and go to work on ad placements, which, come on.
Yeah, they regret it now.
Yeah, but I think so. But once we've reached a certain size, then it's self-perpetuating that if you joined the company, you already bought into, this is not, I'm working in this because I want to actually change it, right? And so you come in baked with, I know how I'm going to explain my choice to family, friends, and to myself. And that becomes a really great differentiator. But it took time to get there, right? And telling the story again and again and again. It's fine. That's my job.
How many years did it take before you feel like confident in your ability to get somebody on board?
Probably 57. To get someone on board.
Yeah, like at TrueAccord, like from day one of you guys founding the company to like, oh, I know I can talk this person into it.
I will tell you though, somebody that you offered head of lending, he regrets it and he wanted me to tell you that because it's a hard thing to work on.
Yep.
And that's why it's dealing with losses, but it's like one of the biggest regrets of his life.
Well, we'll be big enough for whomever that is to look for another job.
Yeah.
But I felt like we hit it before COVID.
Yeah.
Even a year before COVID, I was at a point where I would say, I don't need to tell people that, for example, we're diverse. I just take the candidate, take them on a tour on the floor, and I see them visibly relax. Whether it's a woman, we have incredible executives for C-level, several VPs, several directors who are very impressive. Whether it's people over 40, whether it's, and now it's a little bit harder, but also other categories of diverse talent. We can always do better, but there are definitely places where we've invested and did a very good job. About a year before the pandemic.
That's wild. Is there anything, so I'm very fascinated by this subject because I think people talk about it a shit ton, but like a lot of talk in the talk, maybe not a ton of walk in the walk. Is there anything you've learned in terms of hiring in that general realm, whatever your buzzword is, diversity, yada, yada, yada. Anything that you've learned or like uncovered through that whole process that you wish people knew?
I don't want to present myself as some guru. We have work to do in
No,
different
work
industries.
other people did that you learned from, kind of thing.
Oh.
I'm guessing you weren't the one that figured out the whole recruiting process to make it.
I think first and foremost, we were just honest about it. You
Yeah.
know, people say words matter.
Yeah.
And sometimes people say things and I'm like, you don't understand that you're using. So for example, there was a panel about product market fit a few days ago. And, you know, people talk about product market fit and they say something like people are knocking down your door, blah, blah, blah. It's like you're in Star Trek and like you engage warp drive. And it's, come on. The vast majority of people have seen their product market fit only in hindsight, like a year. Like, oh, I guess that's what it was, right?
In the moment, it was like we held on to the chairs and prayed.
Just bailing out water.
Prayed it didn't break.
But things were breaking and we were
Right.
like, we were focused on the fires and we were focused on what's not working. We didn't realize it was actually product market fit. And it's the same thing here. People say we hired the best talent and then they end up all looking the same. So I think it's number one is to understand that words mean something and actually mean them. And when we said we hired the best person for the job, if that person is a woman, if that person is over 40 or over 50, if that person is a POC and so on and so forth, then you hired the best person. Maybe it helped that I didn't have a very, very wide network in the Bay Area when we started. So I was forced to hire good people that were not from the network. Of course, I'm joking, right? Air quotes. But that is something that we've learned from a lot of people and it worked out.
I love it. I think we're coming up on, if not already over time. So I want to have two things left for you. One, tell folks about War Room. I think you've done 10 episodes now.
Yeah, War Room was an experiment to see if I can actually swing a podcast while running a company. The answer is no, I can't. But
you had 10 episodes.
But I had
testing.
I've had about 10 episodes. I thought it was fun. Friends came to talk very honestly about being a successful founder in a successful company and still having this, oh shit moment, like I think I'm going to fail. It's still online. I'm still paying the monthly, subscription to keep the content online because I think it's helpful for people. And one day maybe we'll do more. We'll see.
I love it. Well, yeah, I haven't listened to them all yet, but I really enjoyed your conversation with Shamir, and I'll put that in the show notes for everybody.
That's a good one.
And put the War Room in general in the show notes. But if folks want to get in touch with you, maybe learn about this new launch that you're doing on the white label side of things, what's the best way to find you?
It's Ohad, my name, @TrueAccord.com. Very easy.
Boom, baby.
And
we'll put that in the show.
He's fabulous on Twitter.
He is fabulous on Twitter. He is. Yeah, I think that's like that's what I'm convinced you've spent most of your time, not other than CEOing. I feel like you've been tweeting since COVID started.
I just want to say something because we have a minute. My generation, we made content on the internet. Okay, we started from BBSs. We moved into Usenet, into IRC,
so combative,
into only online forums. You think you can come into my
You're like,
house?
I'm the meme god, baby.
I am not. I am pre-meme. Okay, I predate memes.
I'm pre-meme.
Okay, don't sound so surprised. This is our stream of consciousness. We know what we're doing.
No. I feel like you just got defensive for something that I wasn't like coming at.
No, I mean, he's legitimately.
I'm staking my claim.
I have to make content on the internet.
Yeah, I am content.
You are in your basement in Sweden.
Exactly.
You are content. You are content. Yeah. Lindsay, how the hell do people find you? And where are you? And who are you?
Lindsay.
We did that, I guess. Yeah, we did that at the beginning.
AtomicFi.com. I'm on Twitter. I'm a less fabulous follow. I'm a little bit more polished sometimes. But one day I'm going to let it
Shots
out.
fired.
Fight. I think those were fighting words.
No, I just can't be as raw. I'm not as successful as Ohad yet.
There's something to be said for that, actually.
Good,
yeah.
Good save. Thank you.
No, that's the truth.
Yeah,
No,
I read some of
you.
your tweets and I'm like, one day.
One day.
Just tell me which ones those are because I have no clue.
Yeah, I don't remember either.
Rapid fire and stream of consciousness.
Yeah, just get it out
Your kids are
there.
going to be so proud of you.
Yeah, one day.
Just wait. They're gonna go back through it. Your kids are gonna cancel you. It's gonna be amazing.
That's true.
Thank you, Ohad.
Thank
Appreciate
you, guys.
you, dude.
This is fun.